Good day to you, my trading friends. It is Friday, February 12th, 2021. Your cherry bomb trade is in for today. Today we're looking at a underlying that we have not traded in the almost one full year that I've been doing videos here with Option Theory. And we're looking at XL. XL, which is going to go with another couple of letters, EV for electric vehicles. While not as sexy as Tesla, as it says in the email that we got from Tasty Trade. Stay tuned. We'll talk more about how you can get emails from Tasty Trade with these trade ideas. But XL is a company involved with electric vehicles. If you think it's worth hopping on the wave that we're probably going to ride with the Biden administration and the climate change initiatives of electrifying vehicles, hey, you may have seen the Super Bowl ad for GM and its pledge to be all electric, a full electric fleet. I can't remember the year, 2035, was it? Well, then you might want to be bullish on a company like XL. So let's take a brief look at this trade overview. XL, we're going to be doing a short put, or at least exploring a short put. I don't know that, a spread on this one makes a ton of sense, but we'll take a look at that as a trade alternative, right? But you'll see XL, highly liquid. See those 4 liquid drops right there? Very liquid options. And you see the IV rank straight up there, 81. So that means we're definitely selling some premium here. So the good news is it's a low priced underlying too. So should XL go completely to nothing, you'd be risking about $1,400. And if you go long, well, you can sell some covered calls, right? So that's what I think we're going to look at today. So let's hop on in to Thinkorswim, our paper trading platform of choice. But first, allow me to introduce myself. I'm down here in the corner. My name is Neil, and this is Option Theory. I want to thank you so much for joining us. I do appreciate each and every one of your views. And if you stick around to the end, if you're new, I'll tell you what we do here so you can decide whether or not you want to join us by hitting that subscribe button. All right, so on screen here, you can see that we have XL pulled up. Take a look at this chart, though, huh? I mean, could you say that 10 was the number for a while? We had a little hiccup here, and then, boy, wow. Right, over 3 times the price increase. We've dropped down, and we're still at twice the price it was for a very long time. Now, notice once again we're in a sideways pattern. One might consider doing an iron condor, but I don't know with the strikes here that it makes sense to do that one. So what we're going to be looking at is doing a put down here at 15, where you see we had previous support. So, that could be a number to shoot for. But then again, here's some solid previous support. We might be looking at, if it were to go through this and we get long, probably expect it to go to 10 for a while, right? Sell some covered calls. All right, let's go ahead and check out that Analyze tab. We're going to be in the March monthlies with 35 days to expiration as of today, February 12th, right? So over here on the put side, we're going to be selling this 15 strike. Look at this here. We're at a 20 delta. The $2.50 lower here at the 12.50, we're collecting a third of the credit. So here we're going to click on the bid, left click on the bid for the 15. Here we are with one contract. Mind that yours may be 10 by default. So check out the card that'll slide across the top there to how to change your defaults to be like ours. Because we trade small and trade often the Tasty Trade way, right? So I want to go for a mid price here of 120 on this one and see what happens. So with that put in there, now we want to take a look at our probabilities. What are our chances of keeping this $1.20, this insurance that we're buying somebody who's, we're selling somebody, I should say. We're selling insurance. You get to be Geico right now. All right, let's go over here and once again, set our date up here in the top right corner to the date you see in the bottom left corner, which is March 20th, the monthlies. I'm going to drag this light gray area till I can see the edge of it right here. And then I'm going to go down to the x-axis and the price axis here and drag it so the gray area just comes in. Ooh, look at that for an expected move possibly. All right. Now these price slices aren't helping us. We want to get them set so they are right where they cross this, where this red line is, right? So we want to go over here and set that price slice to break even on the 20th of March. And we're looking at a 69.9. Can we call that 70%, please? The 70% probability of at expiration hitting this gold line or staying to the right of it. So at least breaking even. But let's call that a probability of profit. Oh, look, we're at 70. All right, 70% probability of profit on this one. What's our P50? We're going to head over to Tastyworks just real quick like here to see what we got for a P50 on that one. We're looking at an 80% P50 and a 70% probability of profit. So there you go. 80% chance that you're going to take $60 off of the table in the next 35 days. That's good. No, that's not bragging rights, for sure. But bragging rights do come when you show that you can be consistently profitable, right? And, you don't have to have these Reddit, cryptocurrency, Forex trades to make you a hero, right? So let's go ahead. Now that we know our probabilities, know that what our maximum loss, it's going to say infinite, but remember, here's your break even at roughly 1380, right? There it is. So that's how much you could lose, right? Because yes, we're selling the 15 strike, but we're collecting $1.20. So 1380 is how much you could possibly lose. Okay, so let's right click this trade, choose confirm and send. There's your max loss of $13.80. There's your max profit of $1.20 or $120. I like this trade, but I want this from my IRA account because I like putting my short puts there, to be honest. I like that there because, I don't know, that feels like a nice, good IRA kind of trade because I don't mind being long a few positions and then selling some covered calls. So I'm going to throw that in there. I'm going to hit send. That puts that into my working orders. And for my already subscribed viewers, here's your thumbs up. I appreciate that you watched this far to the video. If you're new here, let me tell you about what we do. And what we do here is we put on cherry bomb trades 4 days a week. We get those trades from Tasty Trade. You want to get those emails too, right? So head on down to that description. You're going to find a bit.ly link that'll take you over to their MailChimp sign-up page. You're going to see a few check boxes for all the different email lists that they have. Subscribe to all of them. Subscribe to none of them. It's all up to you, right? But the cherry bomb one is the one that you'll get 5 days a week, and 4 of them will have trade ideas. We put those on in a simulating trading portfolio because there's a lot of fear that people have when it comes to investing, and I want to take that fear out. How do you take that fear out? Just the same way you would with taking the fear out of learning to fly a plane. Simulations, right? You have a trainer. So hit that subscribe button and we'll be your trainer here, right? We'll practice together. We'll take the fear out. So hit the subscribe button, ring the bell because these videos come out. This one's going to come out in 13 minutes. I have the day off today. So that's why I'm able to record this one so close to the market open. But until I see you in the next video next week, everybody, happy trading and have a great weekend.